So what's up guys, welcome to another call. This is the lecture number 6. We're going to go through multiple different things, but most notably we're going to cover a thing which I think should be, very basic and something which, everyone should understand, and it's not really talked about in overall, the industry, and that's overall measuring mitigation and measuring order flow. So let's just get right into it. And of course, before we get into more or less the thing I'm gonna go through, please, just read through all of the disclaimers, uh, and yeah, just read through this. So this lecture will overall cover primarily measuring mitigation, but also measuring order flow. So as you guys can see, we'll start with talking about measuring mitigation, what it really is, how you use it, why it's useful, etc., etc., why it why it works, and then pretty much measuring order flow is going to be the second thing we're going to talk about, just because it's much faster to over explain and trying to tell you guys how it works. The third thing is overall we're going to overall show you guys a real example of this, and I'm going to talk about because this plays into the week coming and overall why my bias looks the way it is and why the way I'm entering and get my precise levels, because this is something I use when taking all the STAs, primarily for my re-entries, but it could also be for key levels in the markets. And we're also gonna overall then include some overall bias to what I'm thinking will happen on EURUSD and the DXY. So, according to ICT, this is how you pinpoint key reversals or key levels of overall entry. Now, what I recommend before we get into it is that you actually, don't really use the levels and instead, use an overall lowering of the levels, meaning you use pretty much a level where you overall, an entry just below the levels or just above the levels if you're bullish or bearish, or if you're going to take a long or short. Just because otherwise you may be not getting a fill. Alright, that has happened to me multiple different times, and that's why I'm always overall not getting to that precision. You could do that, however then of course your system will change, your systematic approach will change due to that. It will impact the amount of fills you're getting, because this is super precise. Alright, this is how you get in the PDMA matrix, right? This is how you get overall key reversals in the PDMA matrix, or key entries in overall move to a John liquidity according to a PDMA matrix. And of course, this is, like I previously told you guys, in primarily the PDMA matrix. So the measurement of mitigation is equal to, alright, it's pretty much the most precise way to find where price has fully mitigated a PD array. Alright, meaning it'll pretty much find a key reversal from a key level in two PD arrays, aka finding the exact reversal level based upon measured mitigation. Alright, that's exactly what it is. So how you do it is in bullish order flow. You're gonna take the 0% level in a premium. Both of these are key overall PD arrays. Alright, both are in premium. And what you will take is that you will take over the 0% of the higher PD array, and you'll take the 100% of the lowest PD array. And of course, this is the highest PD array. You're going to take the 0% mark. Like if you split that PD array into quadrants, you're gonna take the first overall, or the first PD array, right, in the PDMA matrix. You're gonna take overall the 0% level of that quadrant, and then you're gonna take the highest point of the PD array. You're gonna take the 100% mark level. All right, hopefully understood that. And vice versa for the bearish, if you're in the bearish order flow. Alright, so how that will look in the charts, that will look something like, here you have a total clean chart, and actually this is a trade me and the students actually took, so this is gonna be a no hindsight pretty much showcase of how I do it. But here's the first PD rate. This is the same range, right? So here you can see from here to this, from this swing high to the swing low. That's a PDMA matrix. From here to here, that's a PDMA matrix. And all of these are moves down to a certain John liquidity. And here you can't see the red equal lows, but there were actually red equal lows down below here. But for this example, I'm going to show you two different measured mitigation moves and how you could enter in them and get the precise as reversal. Alright, so let's just dive right into it. So starting off, right, we're going to talk about this PDMA matrix from this swing high to this swing low. Alright, and the first PD array in this PDMA matrix is actually this break block where you have overall a short-term high, you have an immediate low, and then you have a long-term high. Alright, this high, low, higher high creates a break block, meaning this is the breaker, right? I've written breaker 2 times, yeah. And here's the other, so here's the breaker once again. As you guys can see, we're gonna use the lowest point, and of course this is the first PD array, so the first PD array always gonna use the lowest 0% mark of that PD array, and of this highest PD array, you're gonna overall use, because as you guys can see, there is no fair value gap here. You could overall have used this as well, but you're gonna get the same level. You're gonna get the same level if you use this high. You're gonna use the high of this CB. Alright? Bam. So now you have these two levels. Alright, you have the 0% mark of the breaker, which is the first PD array in that premium from the swing high to the swing low. So this is the first PD array. And here you have the highest PD array in the form of this little CB right here. Alright? And how you actually measure the mitigation is that you actually split them in half. So you take from overall the 0% mark of this breaker, which is the first PD array in the premium, and this is overall the highest PD array in the premium. You take the 100% mark of that CB, and you take the 0% mark of that breaker, and you overall split them into, or measure half point of them. And what you will find is that you'll just find the most precise reversal point. So here you can see the most precise reversal point. Alright, and you can see the high getting formed here, and actually you know delivering price super low. Alright, now here's the second example. This is an example I personally took. Alright, so here you can overall see the measured mitigation move, and this measured mitigation move is between an overall inverse value gap right here and this CB. So I use the 0% mark of this inverse value gap, which is overall the lowest PD array in the premium PDMA matrix, and I use the highest point, which is overall this CB. So I use this right here, drag it out from there, got this, which was overall my entry, and you guys will see here. So here pretty much is what I sent out on Twitter. You can see the level here, 1.10881. This is overall measured mitigation move in an OT of this overall PDMA matrix from the swing high to the swing low. So you can see the PDMA matrix right there. And here's pretty much my sell limit, slightly below as I talked about. That's just because so I'm able to get the fill, because on most brokers and funded account at least, if it just goes up, you might not be able to take the fill, alright, or get filled on that order. So that's why I'm not 100% precise with these levels, just because they're too precise, right? And you can see the levels here, 1.10881. You can see, and my entry was just slight below that level. So you can see that created a high. It's 0.1 pip below this, so you can see precisely the high gets formed 0.1 pips above this. So you can see the first example, the second example, and overall here you have another example, and this overall is a mitigation move. This will be useful later. Alright, so from this swing high to the swing low, first PD array, the CB, right? So you actually take from this low, which is overall a breaker, and you take this CB high, split this in half right here, so between this low and this high. Alright, and you measure that mitigation, and you get some level here, which is overall the precise level. Yeah, Now let's go and talk about measuring order flow and actually, show you guys an example. So of course this is measuring a PDMA matrix. This is primarily, of course, also on a PDMA matrix. So this is primarily, talking about the PDMA matrix, as I've written here. So it's the left side of the move. All right, measures the reaction of the 0 to 25 to 50 to 100% of all moves. All right, so you pretty much measure all PD arrays in the PDMA matrix with 0, 25, 50, and 100. All right, the one reaction of the majority is the statistically best level of PD arrays. All right, so you have 0%, which indicates extreme bullish or bearish institutional outflow. You have 25% mark, which is also extreme bullish and bearish institutional outflow. You have 50% mark, which represents a moderate bullish and bearish PD array, or continuation of the order flow. You have 75% mark, which overall indicates a slowdown of the bullish and bearish, bullish or bearish uh, institutional order flow, right? And you have 100% mark, and if it closes at the 100% mark of that PD array, it could be inversed, and your best choice is to overall close the trade. And now we're talking about closes of bodies. All right, so here you can see overall an example of this, where you actually see a 75% mark here from this move upwards, right? So you can see a 75% mark close, indicating a slowdown right there. So then you overall could focus on this high, and if that high would have hit some primarily a level or something like that, or you would anticipate pretty much a higher time frame key deviation or something like here, you could anticipate this being the reversal high, combined with a slowdown and 75% mark close on, as you can see, of this bullish PD array right here. And then you would overall focus in on that bearish institutional outflow. So then we had an institutional outflow entry due, and we also had a market structure shift. And what you can see here is that now we're actually starting reacting off a 0% mark. So you have a 0% mark right here of this inversed, because this actually got inversed. So 0% mark indicating extreme bearish or institutional outflow. Then you have another PD array reacting off a 0% mark extreme, which is equal to extreme bearish order flow. So continuation of massive downwards momentum, meaning if you see a premium PD array, alright, and if you see pretty much the body not even closing in it, alright, what that indicates is that the market will probably continue down for a while, alright, and the institutional order flow, what it indicates is that the institutional order flow is extremely bearish, alright, if it does not even close in it, like you can see here, and this is overall a 0% mark. So when the wicks only tap into some key level and then not even closes in that PD array, well, that is that it's equal to a 0% mark, and that equals an extreme bearish institutional flow. So you can see here, meaning you could have hold it, right? You don't need to panic close your trade or take a partial or anything. You can literally, if you see this, all right, then you can that indicates pretty much a continuation to the downside, meaning you can hold your trade for longer, right? Which overall maybe improves your statistical edge, market edge, when you get better stats for your data. You can see same thing, 0% mark, when you could hold that and wait for the offset distribution below these reticulos. Here you could have taken a partial, right? Because here you got a slowdown. Because here, what do you have? You have, if you split from here to here, that's a fair value gap, right, CB? You can see 50% mark, we actually closed right there, meaning a slowdown. You can see the slowdown actually came here. We actually delivered upwards into this period again. Where did we close? More or less between these two, so I would say 0.25% mark. What does that indicate? New extreme bearish order flow. So you can see delivered, continue down, and see another 0% mark extreme bearish, meaning the order flow is extremely bearish for GBP USD, and this is overall continuing. So here's what I'm overall thinking for next week. So what I'm thinking is that actually we have delivered upwards right now. We're waiting for what? We're waiting for overall um, lowering in the interest rates. So what I'm waiting for is overall reprice into overall a premium and then lower prices. What I am watching for is overall, of course, bearish order flow, meaning I'm watching overall bearish PD raise, and as price has been really bearish, right? Let's measure the order flow here. You can see that we have now even reacted off of bearish PD raise, indicating that it's extremely bearish, right? So what I'm looking for primarily now is an institutional flow from this FVA gap, which has gotten created because now when we open up tomorrow, we'll probably trade up into that, create the high on a Thursday maybe, and then delivering lower, reaching for this sell side liquidity, offsetting distribution below these vertical lows, and then overall going down to this rejection block. And I guess this rejection block will actually be a low, and then we'll trade 3 months upwards. Alright. So same thing here. I'm watching overall us delivering down lower, continuing with a bearish institutional flow on the daily chart until we have reached this propulsion block 25% mark. Why am I watching this 25% mark? Because I've measured the order flow, and I'm watching overall us delivering here, creating a low on maybe Thursday or something, and then Thursday and Friday starting the delivery upwards into this rejection block right here. And I think this rejection block will create a high for 3 months or something, so then we'll reprice lower into a discount, and then we'll continue delivering upwards. And same thing goes for the DXY, where we're actually doing institutional financial right here. Alright, and we're taking time with liquidity in the form of previous weekly high, so we'll just deliver upwards here into like the concept encroachment, institutional financial lower, taking this sell side liquidity, going into this rejection block once again. This rejection block overall, I think it will form an intermediate low on the weekly chart, and then I think we'll reprice into an premium PDM matrix. So then I think we'll reprice from this swing high to this swing low, and I think I'm primarily focusing on this unicorn right here with this breaker block on a 4-hour chart, and this weekly CB right here over this, which is overall an IPD alignment, and this is the second IPD alignment, but this is the IPD alignment in a discount. Everything over here is algorithmic selling, and then low prices. And then overall, I think we'll take the low getting formed here, because then we'll have vertical lows. Because as I'm anticipating a lower here, we'll just have that as an engineered vertical lows. And same thing for the USD, where we actually have engineered vertical highs, and then into discount, and then high prices taking those engineer vertical highs. That's it, guys. Thank you all so much. That's the lecture for you guys, the number 6. Hopefully this clears something up and teaches you guys something new. So yeah, that's how you get precise entries, and this is how you measure order flow, which is overall basic stuff, right? So this is something you already should know, but I just wanted to clarify it and show you all little cool things on it. So anyways, guys, thank you all so much, and see y'all, and bye.